Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. At present, the Australian dollar closed lower on Wednesday and finished the month of August on a lower note, driven by expectations of tighter US Federal Reserve policy. That is, the US dollar, which measures the greenback strength against a basket of six major currencies, has managed to recapture the 109, putting pressure back on the US dollar also. Looking at the 20-year highs for the dollar index, which is around 109.42, further eyes look to tomorrow afternoon in the New York session for the August US non-farm payrolls, which will take the center stage as eyes look to this month's data likely to come in roughly around 295,000 for the forecast for August, with July seen at 528,000. Looking at the technical aspect though, we are somewhat negative and therefore could see further downside play, especially that we've taken out the level of 68.50.60 and also confirming earlier the outside range day. In light of the pattern, the market is quite heavy and no divergence now does support the bear case, with the ADX also supported with the immediate target seen at 67.90 and lower down towards the 68-cent region and reassess from there. The euro has maintained its momentum above the 1.0000 or parity, and as we can see at the moment, it has buckled though from the rejection from the call of 1.0070 overnight. With the dollar bouncing in Asia time, the market will be keeping a very close eye, see if we can sustain above that parity level. If not, then we could see a pullback to 98.80. But still holding in a positive bullish structure, that is, with the MACD cutting through the midway point and holding a weak signal, could see further calls to the upside. If we do clear the 1.0070.75, that would indicate the dollar has plummeted somewhat away from that 109, maybe looking down to 107 region. But a close above 109 would give great concern that the bulls for the US dollar may strengthen up towards 111, 112, and this would put the euro back to the 96 region. With that all being said though, the European Central Bank meets up on the 8th of September, and there has been much talk that there could be a 75 base point rate hike, even though recession risks loom. Nevertheless, that has kept the momentum going a little bit for euro, so let's see if it can continue and also sustain above parity. Where are the bears, some of us may be asking, as the dollar yen challenges the region of 139.5. I did anticipate with the divergence that was somewhat stronger than it is now, was going to actually reject this level, but has failed to, at this stage, come in. Until we get a close above 139.5 from a New York time frame, that is at 7 a.m., then the market could actually show a retreat and look back to 137.5. However, if we close above 139.5, then that could put further potential to the upside and see stops triggered up to 141 as a short squeeze. Sterling, well, the bears are sinking their claws in even deeper as the market falls further and confirms the first of all, outside range day was confirmed from the rejection of 118.70, and now their second outside range day has been confirmed from the close, that is, that we can see here underneath the region of 116.5. In light of the pattern, I do look or feel that we could see the challenge of 115.45.55, but we are getting oversold and the ADX is getting somewhat overheated. Nevertheless, the bears are still holding to the current trend, and this we can see a reversal through 116.65. The call has remained bearish for gold as it sinks further towards its objective of 1,680.85. In light of the pattern, it still remains somewhat heavy but oversold. Still, the market has been presently bearish for 3 days, and with the current pattern holding, should continue to it reaches its objective. We may see a little bit of profit taking from this region of 1,680, because of the fact is that we've seen a rejection and travelled 80 points since that top side of 1,760 rejection. Wrapping up with gold, well, the market is reverted back to a bearish case as it looks to $86 a barrel as a potential target due to the fact that the market posted an engulfing candle and has been confirmed, and therefore looks towards its bottom side and see if we can get a bounce like previously. What would reverse the bearish sentiment is a move back through 91.30.40, which would ignite the further rally onto $94 a barrel. But at present, it is looking quite heavy, and therefore could still see another $2 fall back to 86 and reassess. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.